I think in our new fund, we expect as much as 40 or 50% of the fund to be invested in Indonesia, and the balance will be between India and Malaysia. So Indonesia is clearly going to be probably our largest focus in the new fund. Well, Indonesia in many senses reminds me of India 8 or 9 years ago. I'd been investing in India since 2000, well before India, got onto the favorite scene of many of the funds. And so I think you see many of the same challenges of investing in a market in its early stage. One is clearly the opportunity set is still smaller, as people haven't quite gotten used to private equity as an asset class. I think secondly, it's a lot harder to access the companies. So we are reverting back to our bottoms-up approach as opposed to intermediary-led approach. So we're meeting lots of companies, not necessarily with a view of them raising money immediately, but definitely in terms of cultivating that experience. I think the third thing is it takes a lot longer to get a deal done because there's a big education process around, what is private equity, what are terms that you have to offer, why you have to give a board seat, why are there certain things like veto rights and those types of things. I don't think of us as not being local. I mean, one of the things that we decided right at the beginning is to have a presence in Indonesia. Our office here is led by Cyril Nohardi. Cyril is our senior managing director. He, amongst others, is spent 48 out of his 50 years of his life here. He's a very well-known and well-respected individual with great access to companies and people and so on. And I think that is absolutely critical. I don't think there's any other way of investing in a market like this without having somebody who has been here for many decades and who has the relationships and insights into the market. I think in a lot of senses, historically at least, the competition was the debt markets. So people were very much more interested in debt-like instruments, even though the interest rates on some of these instruments were fairly high, upwards of, in the high teens almost. I think, today the private equity space in Indonesia is still very much in its nascent stage. There are only 3 or 4 local firms. And in the mid-market size of deals that we're looking at, frankly, we don't see that many players. So, I think it's still, to me, competition is really about substitutes in this case. And substitutes, to me, is really the debt markets. I think over time, as people realize that, they want to have a more balanced capital structure, that's really the appeal of what they're starting to see in taking some amount of equity from us. I think valuations have clearly run up. We wish we were investing in 06, 07 when I first wanted to really invest in this market. I think clearly things have appreciated substantially. So I think one has to be cautious, I think in general. One has to be very selective. So we're prepared to pay up where we see the right characteristics of growth, strong margins, strong dominant positions. So in those cases, you're prepared to pay, full valuations that you're having to. And so I think that's clearly one has to apply a much stronger filter, I think, as compared to 5 or 6 years ago, where I think things were still a lot more, attractively valued, should we say. We look at businesses that sell from one to many, B2C-like businesses, things that sell to broad bases of consumer. So in particular, we are running deals at the moment in financial services, in retail, and in media, which I think is reflective of the kinds of things that we would like to be doing. I think the next broad sector would be business services, and within that, of course, there are many subsectors.